Welcome everyone. I think we are live. I'm doing this by myself. Lucas, Jack, just call out. You can hear everything and see everything okay?
All good.
Good. All right, so welcome everyone. This is the last time we will be doing question time for 2021. We are going to be short and sharp today because most of you are probably on holidays already or doing your last day, so I don't want to drag on too long. However, we've got a couple of key things we want to run through today, and as always, try and give you value. Welcome to everyone on Facebook as well. It will be a little bit shorter, hopefully, today. I can't guarantee. We are down a man. One of our favourites, Greg, is not with us today. He's gone to go have a little operation in hospital, so good luck, Greg. He will be back louder, bigger, and better than ever, of course, in 2022. So hopefully, with only three of us to go on and answer your questions, we'll be a little bit shorter and sharper today. So if you were thinking about checking out early today, hopefully we'll get you to the end of today's session. All right, just because it's the last one, maybe you're joining us for the first time ever, I still want to ask you this question, get you going. What is more important? Is it information or knowledge? Those of you that have attended before, come on, it's the last session, you should know the answer. First timers, have a little bit of a think about it. This is the framework of today's session, information or knowledge. So, knowledge. Why do I say this? Well, information itself is just organised data about something. Whereas knowledge, on the other hand, is an understanding through education and experience. That is, it's actually turning that information into something that you can understand and you can actually apply and use, and that is knowledge. Now, that's what today is all about. That's what question time is about, and that is really what is essential for you, no matter where you are on that home buying journey, because it's important for you to be able to take all of the information that's out there, turn it into knowledge so that you can actually take the appropriate action at the appropriate time. Of course, there is a ton of information out there, so that's why it's more important than ever that you're able to filter through, understand what is relevant, what's not relevant, what is actually factual and what's just fake news and so forth, and turn it into something that is important for you so that you can take the right action at the right time. Okay, before we get started, a little bit about myself. I know how hard it is. So all of you out there that are thinking, well, you know, I'll never be able to afford to buy a home, I'm never going to have stability, I understand. You know, I've been effectively kicked out of a rental place before with nowhere to go, stuck wondering how we're going to get from day to day. You know, I understand how hard it can be to just literally think, how am I going to get to the end of this week? How am I going to move forward? To have that heartache when you effectively realize you've been kicked out of a rental place and you've got nowhere to go. That was me a good 20 years ago. However, fast forwarding to today, I own my own home. I've got a number of investment properties and I understand the framework that was important. I've experienced how to go from A and get to B. It will be different for everyone, but really what I bring to you today is not only that first-hand experience. You know, I didn't just fall into it. I didn't come from a wealthy family, so I didn't have to work from it. I came from having nothing. I've worked through, I've gone through the process. So the reason why that's important is I can bring that to the table, that experience, as well as obviously my training and education, not only as a being in the property industry, but also as a chartered accountant. So I have a good understanding of numbers as well as it pertains to balancing the emotional side of owning a home with the financial and logical and practical side as far as numbers go. So that's what I bring today. You know, today's session is going to really be about trying to impart as much knowledge as we can on you by answering all of your questions. The way we're going to do that is section one, I'm going to do what I call the information section. I'm going to quickly give you some stats, tell you what's happened in the last 7 days. And these are really what we call thought starters, just to get you going. So, you know, you sort of can have perhaps some ideas as to what questions you might ask and how that can be relevant to you. Of course, you can ask anything you like unrelated to that. Typically, we find people like to sort of follow through and say, oh, that's a good idea. How does that relate to me? That'll go for about 5 minutes. Then we'll move into obviously the key part, the knowledge section, where you ask all those questions and we'll answer them for you and give you some key tips and how you might get through. Depending on the questions, as I said, we'll be a little bit shorter today with only 3 of us. That'll probably go for about 20 minutes. And then I'll just sort of wrap up, as to where I think you can put it all together and how you might be able to move forward. Now, the reason why I say that is for those of you that are thinking, maybe this isn't for me today, I don't own a home or I own multiple investment properties, it's not relevant. What we're doing today is very much a framework and a system. So it doesn't matter where you are on that ladder. You might be just looking to buy your first home, right through to your second home, maybe your first investment property, or you've got multiple investment properties. Today's session will have something for everyone. And as I said, it's very much about creating that framework, that system, so that you can turn all of the information into knowledge that's relevant for you. So obviously something about incentives for first home buyers. If you're not a first home buyer, you'll be able to have that framework to say that's not relevant, move forward, and vice versa in other stuff. So that's what today's about, regardless of what the specific topics are. It's helping you build that framework and understanding as to how to filter through everything and drill into what's relevant for you so that you take the right action at the right time. Okay, let's focus. That's the introduction done. I'm going to jump into section 1 in a moment. For those of you that it's your first time, or even if it's your second time and you've forgotten, the way that you'll get the best value out of today's session is to focus, be involved, ask your questions, and really shut off all distractions. We're only going to go for about 20, 25 minutes where I really want you to focus. So, turn your phone off, put it on silent, turn it over, turn off all other distractions, close the door and just focus. Because if you do, you'll leave today's session with value and actually something that, you can take out and immediately apply to your current situation and get those quick wins. So I really do encourage you to focus and be part here and be involved. And that's how you will get value out of today. All right, that's it for the lecture. Let's dive in. So what have I seen happening around the countryside? Well, it's been a little bit quieter than normal, but these are a couple of the key themes just to get you going. Millennials, always saying that it's so hard to buy today versus the older generation. Is it true? How does it play out? What do the facts and figures say? Auction clearance rates, I'll go through it in a moment, but what do we expect? What can we see going forward this year? There's an amendment to reverse mortgages. Maybe it's relevant to you, unless you're a retiree, it may or may not be. Summer property strategies. So what can you be doing over this break to get the most value and maximize where you are? And then lastly, escaping the big smoke doesn't come cheap. And that's really just because we're in holiday season and a bit of fun. You might want to talk about how much you're paying for your holiday place. It's probably not that relevant to you on that home buying journey, but that was really just because it is the end of the year. Happy to have a bit of a laugh and a bit of fun in this last session. Okay, before we have too much fun, let's talk about the weekend's auction results. So overall, total national clearance rate was 63.4%. So obviously well down from the 80s that we were seeing, a month or so ago. But just keep in mind, there was 4,756 homes all went to auction. Last week was a record with just under 5,000. This is the second busiest week nationally since the record started about 15 or so years ago. So notwithstanding how many properties actually were taken to auction, to actually see these kind of clearance rates, so 60% in Sydney, 62% in Melbourne, 69 in Brisbane, 70 in Adelaide, 50 in Perth, and 73 in Canberra. To see those kind of results, obviously the key markets being Sydney had 1,600 auctions and Melbourne 2,140. That is a massive number of properties going to auction for that week. Typically, if we see 1,000 properties in one of the capital cities, that's what we call a Super Saturday, and that's a big week in its own right. So to be seeing 2,000 and 1,600, so just between Sydney and Melbourne, seeing almost 4,000 properties there in their own right, really sort of shows how strong in terms of the number of listings that were there. So seeing these clearance rates means that we're actually still getting a big number. So in Melbourne, there was 1,107 properties sold at auction. Now, remember how I said if we had more than 1,000 properties going to auction, that would be a big weekend. So I just caution those of you who think that perhaps with these lower clearance rates, that prices are on their way down and the market's really turned. Just remember, I think this is more a factor of the surge in listings that we've seen and hence the number of auctions going on at the moment, rather than it specifically being something to do with the market turning. However, that doesn't mean that things aren't abreast and going through. I just caution you to read too much into it. As I said, make sure you turn this information into key knowledge for you, depending on whether you're a seller and a buyer. Lastly, I've gone through this a number of the last couple of weeks. This obviously gets published by realestate.com once a month. So I'll just quickly rush through this for those of you that haven't been here before. If you do want to see my more detailed discussion about this, jump onto YouTube and see, go back a couple of weeks ago's session and watch it. So what is this? This is the total count of sold properties week by week, and it's compiled by realestate.com. So it's obviously based on the data they have at hand. So don't worry too much in terms of, is it the exact number? Is it correct or not? You're really looking for the pattern and the trends. Now, why I say this is important is the red line is 2021, the blue line is last year, and the grey line is 2019. So you can see consistently throughout the year, we have had more sold properties every single week than we did last year. Not too surprising. And even than we had in 2019. So the reason why this is important for you, why do you need to focus on this? Well, this shows you that despite everything, the lockdowns, whatever else has happened during this year that perhaps might have changed things, we're still seeing record numbers of transactions going through. So these record prices that we're seeing are backed up by very, very strong data in terms of the number of transactions that are going through. Unsurprisingly, you can see we're up 40% on terms of the number of sales that occurred this year compared to 2020. And Victoria, obviously the biggest change with 57%, and New South Wales with 33%, and the rest pretty strong as well. So obviously we're seeing a lot of sales go through this year, which is really supporting those record prices that we've been seeing. Okay, that's it for the information. I said it'd be fast. They're just some thought starters. Start popping your questions into the Q&A so that you'll be at the top of the list, and we'll answer those in a moment. Just before we do, who am I? So my name is James Maitland. I'm the General Manager here at Salvo. I've been doing this for more than 2 decades, and I've helped create more than 11,500 homes for people just like you on the line today. Salvo, what do we do? Well, we do a ton of different things. We've got a number of different businesses, but ultimately, we're all about helping you create a home. So like I said at the top of the show, it doesn't matter where you are on that journey, whether you're a first home buyer all the way through to the other end and an experienced and seasoned investor, there is something that we can help you with because we do have a number of businesses. So, just think anything that helps create a home, that's what we're all about. So who have we got on the panel today? Well, Gregory, as I just said, a last minute scratching. So he won't be here. Jack Jan is here and Lucas Karras is here. So these guys will be answering all of your questions and I'll obviously be reading through them. So we will be getting very, very excited in a moment. If you're not sure how to ask a question, I've said that about 1,000 times and almost got stuck there. Really, really simple. Q&A box, click on it, type your question in. I'll read through it. I'll announce it to the guys on the panel and they can answer that question for you live. Okay. You ready? Let's do it. All right, boys. So first up, we talked about auction clearance rates. Those numbers, as I said, I gave my spin on it. What do we typically, for all those viewers on the line that might not be too au fait with the clearance rates and what they mean, what are the typical metrics that we look at in terms of what these results mean and what we can expect in terms of prices? Can someone sort of throw out the back of envelope as to how we typically view those rates and as to where prices might go because of them?
Yes, James. So basically, when an auction clearance rate of 70% is usually presenting with a price growth of 10%. Well, the 60% clearance rate is considering a balanced market. If the clearance rate is dropped below the 60%, maybe the price likely to be falling.
Okay, so in terms of keeping it pretty simple, anything that's greater than 60% means that we're in a balanced market. As it starts to get up to the high 60s and then into the 70s and above, we can expect pretty strong price growth. So, the reason why I think that's important, these are statistics that have just been the way it is forever. So those of you that want to challenge them, please do. These are by no means any internal stats we've got. It's the generally accepted principles based on the data. Why is that the case? Well, it just always is. So, those of you that are sort of wondering, does this mean prices are going down? Well, just remember what Jack said. Anything that's 60% and above, it's balanced. At the higher it gets, it starts to move into significant growth. So obviously we saw for most of the start, the first few quarters of this year, definitely we were seeing clearance rates in the high 70s to early 80%, and hence why we saw such huge growth this year. As we now move down into the sort of 60s, albeit I say that's more because of the number of auctions rather than the amount of buyers, we're still not going to be expecting price drops. It's a pretty balanced market, as we said. All right. I hope that's answered that, because the reason I just drilled into that, I did see quite a few of you asking, well, who says this and why? So hopefully I've answered those for you. We might swing back, guys, if we've got time, and get everyone's view on the panel as to where they see prices going in the new year. We can obviously, this is recorded, we can hold it to them, and we can name and shame them this time next year as to whether their predictions turned out to be true. Before we do that, another question that's come up here from Dan. He seemed to, okay, good. He said he's a millennial and he liked the look of the first topic I mentioned. So, Lucas, prices, wages, it's the old argument. Why, is it true when people in the younger generation say that it's harder for them to buy a house when compared to the older generation?
Yes, it is. It is.
There you go, Dan. He's answered. Yes.
Very, very easy. Look, there's a number of things, but the main one is that the house prices, as we have seen, are soaring, and wages are struggling to keep up. Therefore, it's logical that people are finding it harder these days to get into the property market.
So what are the ratios? Because I know we talk about it all the time in terms of household income versus the median price of a property. What were the ratios, perhaps when the baby boomers were in full strength versus today for the millennials?
Okay, so look, when we compare back in the 1990s, as you said, the property prices hovered around 2.5 times the household disposable income. But now we're seeing it track around about 5.5 times. So the wages, James, are up 2.2% in the last 12 months. However, house prices rose by more than 21%.
Okay, so if everyone out there that thinks that it is harder to buy today than it was, say, 30 years ago, that is true, because basically what Lucas said there, if you're not sure what that means, and Dan hopefully is answering your question, back in 1990, it would have taken, if you spent every single dollar that you earned in your household, it would have taken you circa 2.5 years worth of that income to buy the median priced house. In today, it'll take you 5.5 years. So whilst I'm not condoning or suggesting anyone should not eat or do anything for 2.5 years, definitely you can't do it for 5.5 years. I don't even think Gandhi lasted that long in not eating. So obviously it is definitely harder. So, when we're looking at buyers like Dan and any other first home buyers and so forth that we've got on the line today, what are the key struggles that perhaps they're having and how you might be able to overcome those?
Look, James, there's two main questions on those buyers' minds. Question number one is, can I afford the deposit? Question number two is, can I afford the repayments? So right now, the biggest hurdle is the deposit. As you know, interest rates are only 2% as compared to nearly 18% back in the 90s that we mentioned earlier. So the biggest hurdle is finding the 20% deposit. And to put this in dollar value for our listeners, in Melbourne, in today's market, with the average house price, that equals to $208,000. That will be your average 20% deposit that's needed.
Okay. And sorry, just to wind back when you were talking about, can I afford the repayment? So, we've talked about it before. If you've got the deposit, then arguably right now and today could be the cheapest it's ever been to actually afford to continue to make those loan repayments and interest payments. Back 30 years ago, when house prices were cheaper compared to disposable income, you were at 17, 18% interest rates, which we all have parents who've gone on and on about how tough it was and blah, blah, blah. Yeah, cry me a river for them. But it definitely is easier if you can get into the market to service that loan. But the deposit is becoming near impossible at the moment. So what are some ways, we've talked about it all year, but perhaps you can refresh for everyone. What are a couple of ways that those first home buyers out there, or even upgraders that are struggling to get the deposit together, as to how they might be able to actually get their foot on the ladder if they don't have that 20% deposit yet?
I think number one is the bank of mum and dad.
Always a very good one.
Or an inheritance that might come in the way. The other thing is, we've seen that a lot of people, a lot of those first home buyers wanted to buy a 3-bedroom house, quarter-acre block of land. They know that's out of their reach. So now they're rethinking and they're buying the right property for them right now. So we've seen them buying sort of an apartment that costs a third of the price that a house does, and build some equity and eventually move to where they want to be. Now, but we also seen the government is trying to help as well. And the two main things they're trying to sort of help, first of all, is by introducing new planning systems to allow more density, and also reissuing the 4,651 unused spaces for the first home loan deposit scheme, which allows the first home buyers to purchase a property, their first property, using just 5% deposit.
All right, good. So those of you, I know Greg loves this scheme. Those of you that aren't sure or haven't heard about it before, what Lucas was saying is that this is where effectively, instead of needing that 200,000 or 208,000 that he mentioned here in Melbourne, you can effectively have, a quarter of that. So if you've got circa 50,000 together, you can still be buying the median priced house. You can apply for one of these spots where the government effectively will guarantee your loan. So they'll make it the equivalent of as though you had a 20% deposit. Now, you still need to obviously find the right property, the right location. All the normal rules apply, but it obviously is helping those younger buyers who don't perhaps have the full deposit together yet, but have got the income to service that loan and want to capitalize on the opportunities that are out there today. And it is a great, great opportunity. So really, really good for everyone out there to investigate that if you haven't already looked at it, because it is based on, as Lucas said, there's a number of spots available, the government's allocated. And what Lucas said there, that he perhaps didn't labour on enough, is that because of the lockdowns and so forth over the last year, a lot of those spaces didn't get used. The government's been kind enough, even though it is all our money anyway, to roll those over and put them into this year as well. So that means effectively there'll be double the number of spots available. So really worth looking into that if you don't have the deposit and you do have at least a 5% or 10% deposit together to get the government to underwrite it for you. Okay, so, what about, and no one's asked this question, so I'm going to ask this question. It seems like we've got, everyone's already in holiday mode and not asking too many questions. But I want to say, we've talked about a lot about first home buyers, and what Lucas just went through hopefully was helpful for you, Dan, and everyone else on the line. But what about off-market deals? So, we talk about it all the time. Can someone sort of explain what do we mean by an off-market deal?
Yes, James. So the off-market property actually is very simple. It's the property doesn't go to auction and it doesn't rely on the advertising campaign, but using the agent's database of professional networks. Those kind of the property for sale, we're calling the off-market property.
Okay, so effectively, you might be able to get a deal before it actually goes and it casts 1,000 see it. So, for the first home buyers or just anyone out there that wants to try and capitalize on this idea of an off-market deal, what have you got any sort of tips that you can give to our listeners as to how they can best position themselves to capitalize on these off-market deals that might materialize over the Christmas break and into the new year?
Yes, I do, James. So the off-the-market deal, actually, I personally have many off-the-market sales, and I think is really good opportunity for both sellers and the buyers, but it could be very fast. And so there is some tips for the buyers and the sellers. You need to think about it before you considering the off-the-market property. So for the buyers, I've got 5 tips for them. So tip number one.
Hit it with us.
Yeah. So tip number 1 is very important to find and have a close contact with the agent who dealing the target area and property type you are looking for. So this is very important. And especially you're looking for those agents who have a good size on the market share and they have some success experience on the off-the-market property. So they might have the channel to have the property you might looking for, which is off the market. So the tip number 2 is give the agent the idea what exactly you're looking for, the property type and your budget, any specific requirement of the property you are looking. So make it clear. In that case, if the agent has the property comes out, they can let you know. Then you can find the property you're really looking. The tip number 3 is be informed and being able to inspect the home at very short notice. This also means you need to have your finance and the legal advisor ready. So if have your finance ready will be very helpful. You'll make your decision quickly because off the market property always comes out and you need to make faster decision. So the number 4 tips, this is very important. It's just make sure your agent has the sales authority from the vendor. Why this is very important? Because the off the market property sometimes is transparent. So it might be the vendor is not really fully commitment for sale. So in that case, just make sure your agent has the fully authorized from the vendor to selling the property. The last tips is maybe doing some research before you make offer or you sign a contract on the off the market property. So this is kind of go have a look online, see the similar property, how much they're selling for, and also the comparable sales in the recent period, just to make sure you don't overpay the property and just paying the fair value of the property you're looking. Because sometimes off the property, the process is very fast and short, and you need to make quick decision. So that's pretty much the 5 tips for the buyers and who are looking for the off market property. And also for the sellers, and also have the tips for them. This is only 1 tips. Is find an agent, choose an agent is more specialized on the off the market property sale, have well knowledge and experience, and also the good reputation, like us. That's
I like that.
Points. Yeah.
All right. So anyone that didn't quite get that, as far as it goes for buyers, what Jack said, really, really simple. I'll just sum it up for you, is you've got to be in contact with the local agents because they're not going to present off-market deals to you if they don't know that you are in the market ready to go. And if you are looking at these opportunities, you've got to be prepared to go fast because typically what a lot of agents will do is in order to get the sellers committed to the listing, they'll say, listen, before you pay the advertising and the marketing dollars and auction fees and everything that comes with it, sign the authority. Let me take it to my database. I've got a qualified list of 5, 6, 7 buyers that just missed out in the last deal. Let me take it straight to them and see if I can do a quick deal. Now, if that doesn't go ahead or you don't move quick enough, then they'll obviously go to the full campaign. So if you do get presented with one of these opportunities, don't rush and make the wrong choice, but you've got to be prepared to move quickly. So as Jack said, research, be organised, have your finance in place, know what you're looking for so you can quickly say, yep, this is good, this is a good deal, and be prepared to move on it quickly. All right, it's just gone to the top of the hour, 3 o'clock. I want to just quickly go around. Lucas, you first. Predictions, interest rates, prices, and anything else that you want to throw out on the table that we can hold you to this time next year. What's your predictions for 2022?
Look, I think interest rates for the majority of the year, I don't expect to see any major movement. So I still think it's going to be hovering around the 2, something with a 2 in front of it. Prices, I see in early January, mid-January to early February, I think we're going to see those huge clearance rates again and good prices as people getting back into the rhythm. And I believe the big movers for 2022 will be apartments. There's enough statistics and studies done to show us, due to the pandemic and the lockdowns that we've had, many developers did not go ahead with marketing the projects or paused on building anything. And all the data is telling us that in the next 4 to 5 years, we're going to have a huge shortage of apartments. And with the markets, with the overseas market also opening up and the borders and people coming in, they tend to look for apartments as well. So I think it's creating what we call a perfect storm for apartments. So now is a good time to look for apartments and take advantage before it all starts going up.
All right, that's recorded and locked away. We will name and shame you. Hopefully your predictions come true this time next year. Jack, what about you?
I think the next year, 2022, the one thing for sure is the price will still going up. I'm not sure if we'll still grow like more than 20% or not, but I personally thinking it wouldn't be that higher, but it still grows with the current low interest rate. And also Lucas said the interest rate wouldn't go up, but next year, plus we still have the government incentive on stamp duty concession. And also plus the border is going open. We have a more investor from overseas, and they're all looking to buy in Australian. And also we still have a huge amount demand from the first home buyer. And they now turning around and looking at the apartment instead of the house because affordability becomes an issue for them. So my prediction is the price might be going between 10 to 15% still. And also we have a more first home buyer looking for the apartment in a city area. And also we're looking the huge demand from overseas investor.
All right, good. Now, it wouldn't be fair if I didn't throw down my predictions. So I'll do this quickly. Interest rates, I think, are going to remain steady throughout the year. I really don't think that much is going to change there for all of next year and probably well into 2023. In terms of prices, I pretty much echo what the guys have to say. I think it's going to be interesting because I think house prices or, freestanding houses, I think have pretty much got to the point where they're starting to become unaffordable. So I'm not sure we're going to see too much in terms of those top dollar prices moving much further, but I think everything below it is going to slowly catch up, with obviously the biggest one being apartments. I think we've talked a few times over the last couple of months about the gap between freestanding homes and apartments has gotten bigger and bigger, and I think slowly they're going to catch up. So how that translates into the statistics in terms of the growth, I think it's going to be probably more when we go down to those categories, see some pretty strong growth in apartments that haven't had the same growth this year as freestanding homes are. And the other big thing I think is this 2023 hopefully will be the last time we ever talk about coronavirus, vax rates and so forth, because hopefully that will become a thing of the past by this time next year. All right, we are 3:05. We're a little bit quicker. I did say I just want to give some closing comments as to where you may want to go. So first of all, for everyone, I would love to think that you're going to think about what I'm talking about here. This may be something you consider in the new year, because for most of you, enjoy the break. It's been a tough year. Just surviving is something in its own right. If you've got through here and everything's okay, the family's all right, that is a big achievement in its own right. So you should celebrate that. Give yourself about 5 minutes off over Christmas to unwrap your presents before you start getting back into being focused. No, joking aside, take a few days, relax, enjoy Christmas, enjoy time with the family, enjoy the new year, and really just come back refreshed and ready to hit the ground running in the new year. So 2021 is done. 2022 is, what are we, 22nd? So 9 days away. And then 2023 will be around the corner. We're going to have to find a new graphic next time that we see you guys. But notwithstanding this, today was about trying to give back, give you a bit of a framework, answer some of the questions. But ultimately, it was really to sort of say to you that, moving forward next year, there's a couple of ways you can go. You can do what most of you will do, and that is do nothing. Now, what I mean by that is not that you're going to do nothing. You're not going to make any changes. You're going to continue doing what you've always been doing. Now, for some of you that are kicking goals and you're happy with everything, great. For those of you that have missed out on buying a home or selling your home or renting your property, whatever it is, I just say this to you: if you don't make a change, then don't expect to get a different result. So, if you are looking for something different, then don't just keep doing the same thing. What I really hope that you do as bare minimum is think about what we talked about, think about that framework, think about how you might change it up, absorb all of that information, turn it into actionable knowledge for yourself, and do that yourself. However, in the new year, what I hope a lot of you will consider doing is coming and letting us help you. Let us work with you and help you wherever it might be. As I said, we're all about helping create homes. So it can be as simple as just helping you refinance your existing home, right through to finding you a new home, building a new home for you, wherever it might be. With that in mind, I don't know a lot about you on the line today. Obviously, we've got very limited information, given that this is just pretty much a few questions that have been asked by people. So how can we best help you move to the next step? Well, the best way we can do it is to sort of get together and have a one-on-one session. Now, before I tell you a bit more about that, I just want to qualify the types of people that will be the right fit. You've got to be motivated. You've got to be prepared to take action. You've got to sort of understand this concept of actionable knowledge that we've been discussing today. And ultimately, you've got to be sort of hungry to actually make those changes. If you want to just keep going and not actually, take a step forward, then it probably isn't right for you. If you've joined us in today's session, you've got value out of it, then it definitely is worthwhile moving to the next step. So, as I said, how do we do it? Well, the best way is to meet up and go through, so we can understand a little bit more about you and as to how we might be able to assist you. As I said, we're not going to be able to help everyone. That's just reality. Or you may not want our help even if we can. So what I say is the next best step and the smallest possible commitment I can ask you for, while still guaranteeing you a result, is to get together for a quick 20-minute or so catch up. It can be done virtually, of course, in Zoom, FaceTime. We can even just do it over the phone, the old school way. We like to see faces, so you can see us that we're committed. But obviously, if you just want to do it over the phone, that's fine. And for those of you that want to go back old school way, you can actually come and meet us face to face. Pretty straightforward. We'll just run through a few of the questions that we'll ask you to understand where it is that we might be able to help you. Ideally, we'll give you a couple of key things that you can take away immediately and put into place to get some of those small wins, so that regardless of whether you move forward with us, you'll actually get something out of that session. And then we can really sort of say, this is how we might be able to move forward together. And then really it's up to you to be prepared to take that next step and actually achieve what it is that you want to do. So if that sounds like you, jump on. I know the guys are still doing these sessions for the rest of this week. And I'm sure that they'll be happy to catch up with you early in the new year, or even if you're really desperate to jump on quickly, I'm sure other than maybe the Christmas dinner table, I'm sure the guys will be happy to chat with you. So how do you do it? you can jump into the chat. There's a link there you can click on. If you joined us via Zoom, your browser should have been redirected to the booking page. And then lastly, I'll send you an email with a follow-up after today's session with the link. Those of you that are joining us from Facebook, you should see that booking link should be somewhere on our homepage. I'm not sure where exactly, but if you can't find it, just drop something in the comments and we'll email that through to you so you can book one of these sessions. All right, before I let you go, I just want to tell you about the last holiday I went on. It was the good times when you were allowed to Queensland without a COVID test, without having to get tested when you were there, without all the hype that's going around right now. This was back in July. And the reason I tell you this story is that this was a really, really special moment for me, but it almost didn't happen. So we went to Hamilton Island. This is my eldest daughter, Isabella, you can see here. And she said to me one day, she said, look, Dad, I'd love to get up and see the sunrise, go to the top of that mountain and watch the sunrise in the morning. Can we do that tomorrow? I said, of course, love to. That night, I had a look, what time does the sunrise? 4:45. Not that enjoyable when you're on holiday having to get up that early, but I thought, no, she's excited. I set my alarm and went to sleep. Now, what felt like only 5 minutes later, I heard that annoying iPhone beep, 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 beep alarm. So what did I do? I did what we all do in life all the time, and I hit the snooze button and said, just rest a little bit more. Went off again. I looked around. She wasn't awake. It was dark. No one else was up, and I thought, I can't be bothered, and I hit stop. Now, I'm sure you've all done that, and you know what that feeling is like. So what happened to me? Well, I got remorse, and a minute or two later, I thought, no, I got to do it. I woke her up. We jumped up. We quickly got dressed. We ran up to the top of this mountain. We got that great photo. It's a little bit blurred. You probably can't see properly through the camera, but the joy on her face, the experience that we got is something that I'll always remember. And it was a really, really special moment for me and also for my daughter, Isabella. Now, this is something that almost didn't happen. You all know what it's like. You've all slept in. You've all missed your bus, your train, getting to work on time, getting to a game, whatever it might be, because you've thought, I'll do it a bit later. But if you actually want to get out there and achieve those things and do it, you've got to be prepared to make a little bit of sacrifice and actually take the action now. So I say this because for those of you that are still on the fence thinking about it, if you want to hit 2022 running hard and fast, then you've got to be prepared to make some changes and do some action. So don't hit the snooze button. Don't hit the stop button. Jump on, book one of those sessions, book it in advance in the new year, whenever it is, so that you know you can hit the ground running and actually achieve everything that you want well into the start of 2022, rather than waiting until the end and then realizing that time has gotten away from you. Now, that is it. This is, as I said at the start, for those of you that didn't join us right on time, this is the last session for 2021. So from me and the guys on the panel, thank you very much for all of your support this year. I know it's been tough. We've had technology problems. We've been coming from our homes. There's been a lot of frustration around from people with the stop-start of the economy. It definitely has been tough. So as I said just before, if you've made it to the end of this year, that is a big achievement and you should celebrate it. Take a few days off and enjoy yourself over the Christmas break and have a very, very Merry Christmas and a Happy New Year from me and everyone on the team. Guys, thanks for your dedication week after week, regardless of what issues we may have behind the scenes that, of course, most of our listeners don't see. We've managed to continue to stand here and deliver powerfully for everyone. So, guys, thanks for your support. Everyone on the line, thank you very much. And we will be taking a 2-week break, I think it is, and back on the 2nd or 3rd Wednesday in the new year. So from me, the guys on the panel, and Greg, who's not here as well, thank you very much again. And we look forward to seeing you in the new year and seeing all the success that everyone is going to have as they hit the ground running in 2022.